is the voice of disruption.
Hi, it's Ken Rutkowski, and welcome to Coin DMZ, where we every week dive into what's going on in the crypto space. William Quigley, of course, is one of the smartest people when it comes to this. I say you're the smartest guy, period.
Thank you so much, Ken.
Okay.
You're the handsomest.
Well, it's whatever. What is going on? My grandparents want to know about crypto now.
This is what the phase we're in right now. You're referring to the fact that in the last 30 days, cryptos, whether it's Bitcoin or Dash or BCH or Ethereum, they've all been just going up, right? Yeah, and the thing is, that is really the way all assets that are appreciating over time, it's almost always they do it in these jarring upswings, because what happens is it's word of mouth. People start to hear about stuff and they're like, wow, and then it becomes a frenzy, and then people lose discipline, the prices spike up because there's a lot more people wanting to buy than there are people wanting to sell. So if you want to entice people to sell, the price has got to be high. And what we saw, what was it, yesterday? It took $11,600 to get someone to part with the Bitcoin. $500 for someone to part with an Ethereum.
But it went down.
And of course, because it's cyclical, right? So you had a big run up. And then keep in mind, a lot of what you're seeing is non-humans doing stuff. These are the bots. Most of the trading is done by bots, right? On all the exchanges, 70%. No different than NASDAQ and the New York Stock Exchange. It's all bot driven.
That took decades to get to that bot level. This is an automated
and now
process
instead of hiring PhDs out of MIT to write all that, you go and you can literally, if you have any coding skills, you can write your own bot in a day, or you just pick one up off of GitHub. They're all free, right? So yeah. And the only question is, what algorithm does your bot follow? Does it look at the 200-day moving average and then buy if the prices get within a range of that, and so on? So, but that also causes this mass movement, because a lot of the bots are programmed to really follow the activities of other bots. So, oh, they're all selling, we should sell. They're all buying, we should buy.
Okay, so that's where we'll see that roller coaster ride. Because
looking at day by day, of course, you and I know this, it's a crazy way, unless you're literally a professional trader, to invest, right? Day by day, it's nuts. You try to have an opinion about where this stuff's going, why it's valuable, how big the market is, and then you say, okay, here's a good entry point.
But the average consumer is starting to learn about this. We talked a couple of weeks ago that you could walk in the middle of Manhattan and say Bitcoin to somebody and they'll go, what?
Yes.
But today they go, oh, I've heard of that.
Possibly. I bet you even still, I know for anyone watching this program, they're like, well, everyone's heard of Bitcoin and Ethereum and Litecoin.
This group does.
But the vast majority of the planet has never even heard the term. They haven't.
Still blows my mind.
Anytime I go into a retail store, I always say, do you take Bitcoin? And right now, I just did this yesterday, by the way, it is still 9 times out of 10, they've never even heard the term.
But do you remember, let's go back to maybe 2015, where there was Subway sandwich shops taking Bitcoin.
And one of my companies was helping to do that. Yeah,
right.
Yeah. So you had Bitcoin payment processors who started to say to these retailers, hey, consumers are going to deposit Bitcoin, you should take it. And it didn't pan out.
It didn't at all.
For very good reasons,
What?
Of course. Well, there's two really
big reasons. The fee structures.
Well, the most important one, it is really consumer unfriendly, right? Let's face it. Anyone who's struggled through trying to get a Bitcoin into a wallet or an Ethereum or any other kind of coin knows that it's scary, there's no real help, and if you screw up, everything's lost. This is not a consumer-friendly thing. And as I always say, for anyone living in LA like we do, or anywhere else in the Western world, the notion that you need some special thing to buy a sandwich at Subway is kind of silly. Credit cards and Venmo and
it's all there already.
It's all there already. Cryptos for payments fit a particular type of transaction.
Give me an example. What kind of transaction?
The perfect transaction you're not spending a lot, so sub maybe $20, and you are buying something from someone in another country.
Okay.
Do you want to go to your bank, try to get, you know, Polish zlotys and send the guy Polish? Of course not. You know, the currency conversion cost, the trouble is a bitch. If you did a bank wire internationally, you're going to pay $40.
So it's almost 10 years ago when we're doing micro transactions, where it was a few cents here and there. No one can do it because the fees were so high. You're saying now it's where the switch is, that's where Bitcoin's great, is under $25 in a different currency.
Well, I do want to make a subtle point here. I think cryptocurrencies are really good for sub $20, $25 transactions cross-border. I think Bitcoin is a disaster. And
what?
Bitcoin's a disaster because right now the median transaction fee is $4 and it spikes to $8. Who wants to spend $25 on something and get hit with a $4 to $8
That's ridiculous.
fee? Which is why, what is the median transaction for Bitcoin? Do you know?
I don't know. What is it?
$1,260.
So it's absorbed automatically inside.
If you're spending $1,260, you don't mind $4.
Right.
What's it for Ethereum? Ethereum charges you 20 cents right now, which is why the transactions that make sense go down to 36 bucks.
Wow.
Right?
Well, then let's talk about that. Our next thing is easy. Beyond Bitcoin.
Yeah.
You know, I know we sit there and talk about all the other different tokens that are out there, currencies that are out there. What is Beyond Bitcoin?
So it's the name of my band.
Is it Beyond Bitcoin? Yeah.
What a wonderful group.
And it's only Kasha Google songs you're singing, right? Go ahead.
Yes, yes. No one's going to get that who's under like 70. What happens after Bitcoin? Obviously, the most radical invention after Bitcoin was for cryptos was Ethereum,
right?
Because you could make a smart contract. And then what has Ethereum allowed? It has allowed a bunch of other cool little cryptos, we call them ICOs, to get born and raise money and build out what they're going to do. And so there's a whole bunch of them out there now. Some of the most interesting coins right now, though, are not built off the Bitcoin or the Ethereum blockchain. They're not even ICOs. You got BCH, right? Why do I like BCH, which is a fork of Bitcoin? Why do I like it? Because the fee structure is low, right?
And that's a big deal to you.
Yeah, I think right now the average transaction size for BCH is about $500, right? So it's still high, but the fees are 2 or 3 cents.
Wow.
2 or 3 cents. So it's
help me out. When you look at these Bitcoin fees that you're talking about compared to BCH, why can't they just lower the Bitcoin fees? Or is it just because that's a syndicate that's out there?
Yeah, you'd have to say, always be very careful with your pronouns. Who is they?
Who is they?
Yeah, who is
the miners, right?
It's the miners. So what you're asking is, why is the Bitcoin governance structure such that fees of that amount are the norm? And it's because of the way the Bitcoin system is designed.
Okay.
If you want to get your transaction processed in under 3 days, you want to get it in the next 10-minute block. Every 10 minutes, the transactions get processed. But they pick and choose which transactions they're going to process.
Oh,
and you know what that's based on? How much you pay, baby.
Got it. It's priority.
Right. So when you send a BCH or a BTC, you really want to give more than the nominal fee amount.
So you have more
I
prominent
always do
positioning.
$4 or $5 because I want that thing done
but
now.
that's gotta really suck for a merchant that is doing those $25
It's
type fees.
impractical.
Yeah.
Bitcoin is impractical for that. Bitcoin is digital bearer bonds. What are those? Those are stores of value. Like, think of them as gold bars. No one goes into Subway and gives a piece of a gold bar. You use gold as collateral. You use it maybe as investment. If you want to transfer something big to somebody else, hey, I'm going to buy your house. Here's some gold.
Your Indian brides.
There you go. Yeah,
use that for that.
too.
But Bitcoin, in theory, is kind of like the gold, is what you're saying.
It's digital gold.
It's impractical.
Yeah, and I call it, like I said, a digital bearer bond, which means a bearer bond is something anyone who owns it. If they have physical possession, they can send it. But no one gives bearer bonds to buy sandwiches. They give them to banks to hold for investment or to buy something major. That's what Bitcoin is. Bitcoin is, you'll hear this term a lot, a store of value. If you would like to take some of what you have, a couple % of your net assets, and put it in Bitcoin for investment purposes, or just to have a portable way of transferring a lot of value outside of a banking network. And there's a lot of people who prefer not to keep their money in banks. We in the Western world think, well, we used to think banks are safe. They're actually not that safe. But in particular, if you're not in a country that has a great rule of law, if you're not in a country where there's a history of banks abiding by procedures.
Third world.
Yeah, and even developing world.
Yeah.
How many times in South America have we seen the banks get confiscate the currency that's deposited and say, we're going to issue you new notes that have been
theoretically India went through
reduced
this.
in value. Yes, they have.
That's right. So we're looking at a major countries.
All of the emerging markets have experienced this. Greece, that's not a third world country. So if you're in one of those countries, you could put your money in a bank really unsafe, which is why a lot of these people have cash. Cash, very unsafe to hold. The perfect place for Bitcoin is holding value that you want to preserve and make it transferable to another person.
All right, let's do a high five real quick. Congratulations. You just completed your ICO.
Yeah, technically it was a token sale.
Okay.
But yes.
What's the difference of that and an ICO?
Well, an ICO is when you're selling a security, right? So some of these tokens that people buy, the ICOs, they are securities, right? And then some are simply what we call utility tokens. So they do a particular thing for you online, right? So WAX, the waxtoken.com.
What does WAX stand for?
Worldwide Asset Exchange.
Okay.
WAX came out of the Opskins business that I'm the CEO of. We trade digital items. We help people buy and sell digital items, in-game digital items at Opskins. And we knew that cryptocurrencies were going to be very important to expand the market because a lot of people have trouble getting their fiat, their traditional money, into payment processors to buy these items. There are markets like ours that can't take payments from everybody because they don't have adequate identification. So you don't know if their accounts are stolen, their credit cards are stolen. So cryptos are perfect for that because they're immutable. Once you have them, you can't reverse them. So we can open up our business to a lot more people. But we needed a coin that people said, why not use Bitcoin? Why not use Ethereum?
I already know. Let me guess. The miner fees.
Miner fees is a big one. Ethereum miner fees were not that big, but Ethereum is a can't scale to the degree that we needed. I believe it will get there, but we didn't know when. And we're building a smart contract.
By the way, when you say scaling, are you saying on transactions?
Number of transactions.
Yeah, that's the problem. How many transactions on Bitcoin? I mean, Bitcoin's how many?
So Bitcoin can do
8.
They can do 1,800 transactions every block, right? So
which is
what
type of time parameter?
10 minutes.
Okay. How many can Ethereum do?
So Ethereum, we're going to get into this debate about what's theoretical, but call it
25.
Up to 6 a second.
6 a second.
Yeah.
Okay. And then EOS, when that comes out, that's promising to do like 50,000 or something like that.
It's like 1 million a second or whatever.
WAX, what can it do?
We will use probably elements of EOS,
okay,
elements of some other technologies. The wonderful thing about cryptos, for any entrepreneurs out there, the beautiful thing about the crypto market is all the software is open source. You grab it, you can build your own blockchain with your own smart contract. It's very cool. So with us, we need to be in the tens of thousands a second.
Because there's so much activity.
Yeah, and we believe that is all of the tech being built right now is everyone's aware of this problem, so we're going to get there.
But your token sale, did it do what you expected?
It did better than we expected, yeah. Yeah, because the token sales, as maybe a lot of the audience knows, they really popped like in May, June, July, August, right?
Huge.
And frankly, there were a lot of people issuing tokens and ICOs or token sales that I think the amount that they raised was not justified by what they could do. You know, if they had been raising money from a venture capitalist, they might have raised $500,000, but they raised 50 million or 60 million.
That's crazy.
Yeah, it really was.
Is it because there's so much Ethereum that's out there and they don't know what to do with it because they bought it priced so low?
I think it's a lot of things. It's one is people have all of this cryptocurrency, and what do you do with it? Because you can't use it to buy a Subway sandwich. The other is, remember, the history of a lot of these coins is massive appreciation. So you want to get on the next one that's going to pop and do that. So there's a lot of chasing the hope that it's going to go up in value.
A former venture capitalist, or are you still a VC?
Well, I'm right now, I guess you'd say, on sabbatical, because I'm not doing active investing other than in cryptos.
But the whole idea of venture capitalists and this whole ICO market, it's kind of shaken the whole foundation of the whole VC.
It really
back.
has.
Right?
I mean, I don't think the venture industry fully appreciates how disruptive the cryptocurrency phenomenon could be for their business.
Well, give an example. A wax token, which is yours. How long did it take for you to say, yep, we're going to go off and do a public raise, and let's raise and let's close it? What was that window?
It was, 3.5 months.
And how much did you raise?
About 80 million.
80 million. If that was a VC play, and your company wanted to go off and raise 80 million on a VC world, in the VC world, how long would that take?
Well, depending on the state of the business, it very possibly you'd be preparing for several months.
Right.
And then it would probably take 5 to 6 months.
And equity-wise, how much did you as a company have to give up in equity?
Well, and by the way, I never say give up because you sell.
You sell.
Right? So the wax token amounts, there's about 185 million wax tokens. And we sold about a third of those, about 60 million tokens.
Which traditionally is a VC raise, a third of the company.
Yeah, that's right.
So you're still within the same type of
I
formula.
kind of operate with that like mental framework,
you've always
right?
been in there, right?
Yeah, and so as far as the venture industry goes, it's a funny thing about VC, and I've been doing it for 20 plus years. We as VCs are always investing in new business models and disruptive technologies, people who want to disrupt industries that need to be shaken up, and yet the venture industry is very slow to want to change how it operates.
Blows my mind.
Yeah, I'll give you the one that always strikes me as just crazy. The least efficient capital raising structure and entity structure to me is a Delaware C Corp, right? There are far better ways to structure your business. And yet the venture capitalists...
But for the VC, it's good.
I don't think it's even good for the VC.
Really? You
No.
think it's not good for anyone?
I don't think it's good for anybody. What I think is when I first got into venture capital, I was fairly sophisticated about this stuff, and I was recommending different structures. And I remember being told by the higher-ups in the industry, hey, venture capitalists, remember, we raise money, and then, because I was an early stage guy, and then another group of VCs come in, and another. And so whatever structure you start out with, you've got to bring in people down the road to be happy with that. And they're not going to be happy with your structure. So you got to go to this crappy structure. And I'm like, but that's not good for anybody. And they're like, that's just the way it is. Which is, to me, was so ironic, because here's this industry, that's the venture industry, that's known for looking at things that are dumb and building better solutions. And the crypto industry has substantially innovated around structure.
Which is far surpassed with the current infrastructures.
Yes.
Real quick, who is the oversight committee where if I do an IPO, initial public offering, you don't even have to say it the right way. It actually seems hard to say. I don't want to do an IPO anymore. But you do have multiple government agencies that overlook this. They watch the process. If I do a VC raise, we have groups that watch that too. Who's watching or the watchdog for ICOs?
Yeah, so with ICOs, first you're right. When you do an IPO, if you want your stock to be listed on a regulated exchange, you have to follow certain rules by the Securities and Exchange Commission. The exchanges themselves have rules and procedures you have to follow. The accounting firms that give you opinions, they're regulated by states.
Right.
So there's this very formalized process for ensuring that security, when it goes out, has been vetted. Now, by the way, by no means does that mean every security that gets done through an IPO is a good investment, right? And to remember, most of these rules were written in 1933 and 34, after the Great Depression began. In the ICO world, because cryptocurrencies are distributed, decentralized, there is no Bitcoin Corporation or Ethereum Corporation, these blockchains are permissionless. Anyone can use them. Anyone can say, I'm going to raise money to go build something on a crypto platform, and please give me contribute. Usually the contributions are, cryptocurrencies themselves, Bitcoin or Ethereum or Litecoin or whatever. And it is incumbent on the person who's deciding to buy those tokens, because these people are selling tokens, to do their homework. Now, the good news is, though, you could say, wow, this is really, really risky and whatnot. And I guess it is. But, and this could be a far longer conversation, but let me give you one angle to look at. The SEC, Securities and Exchange Commission, doesn't tell investors, hey, you ought to go on the guy's LinkedIn profile. You ought to go on social media account. Hey, see how many friends you are removed from this guy and go to them. No, they don't tell you to go to a conference where that person's going to be presenting. By the way, those are all pretty good things to do.
Absolutely.
If you wanted to know, is this a legit thing or not? How many people actually go meet the management team of the company about to go public? Generally, very few, if any, right?
With the ICO market, people are doing
yes,
this.
The ICO
They're
market, people are much closer to what's being done, just like the venture industry. The venture industry doesn't have a government entity saying, let's look at this company.
So you're saying on the ICO side, there's a little more due diligence by the general public than there would be
I would say
ICO.
the ICO market is relying on 21st century capabilities of scrutinizing whether or not these particular coins. Let me just give you one other one. Does anybody take a prospectus and the SEC says, we're going to operate a Telegram channel and you can ask us?
Of course not.
No, but guess what? Every single ICO has a Telegram channel, a Discord channel, has a Reddit, and people are asking questions, and the owners or the issuers of these ICOs are actually directly engaging.
Okay.
That would be prohibited, by the way, because with an IPO, because you're told to say nothing.
It's kind of messed up.
Yeah.
It is messed up. Look at this. This is the current charts right now.
These are the
top 10, well, let's call them coins.
Yeah.
Because they're all over the place.
Down day, by the way.
It's okay. Everything's on sale, but it really isn't on sale. I don't feel it is. It's so expensive. But besides the top couple, what other tokens out there that are exciting to you?
Well, I would just mention, one of the reasons, you'll note the way I look at coins, and I've talked about this before, I want to know what platform they're built on. Then, is it scalable platform? Then I want to know what is their governance structure so that ultimately how much are the fees going to be for doing things back and forth.
Big deal to you, yeah.
And is there harmony within the team that's building it, or is there discontent? We saw Bitcoin has had a couple of forks.
Yes.
Right? Now, even though those came and went without a hitch, let me tell the audience, it's nuts to me that that did occur. If you had a company and people were fighting each other about the direction, no one would want to own that company until that got resolved. So the fact that Bitcoin had this civil war and then a few forks happened and you birthed out Bitcoin Cash and then Bitcoin Gold, and there'll be others. The fact that that happened and Bitcoin didn't miss a beat.
Blew our minds.
Yeah.
We didn't expect that.
You wouldn't, right.
We didn't expect that. I'll tell you which one I like. I like Dash. And let me just tell you why. They're advertising.
Yeah.
I hear Dash ads on NPR. I hear them going after a certain audience. I don't hear any other crypto doing an advertisement.
So Dash is interesting, and again, I never know how technical I want to get. This isn't that technical, but you have these governance bodies for some of the bigger cryptos, right? That are they're not paid, but they're people who sort of overlook the blockchain and decide. Maybe all the coin holders can decide whether or not software can be upgraded and the blockchain can be modified for that coin, and so on. The issue with a fully kind of decentralized democratic process is it's hard to get shit done. And so if Bitcoin had a couple of $1 billion, if there was a Bitcoin organization, and it could go out and say, let's build some consumer-friendly ways to buy.
It'd be great,
right?
How many people are working at Bitcoin? Or
you're talking, tens to dozens of people for something that has $165 billion value. It's crazy.
Compared to Ethereum.
Yeah.
How many people working on the Ethereum?
Well, you could say on all the Ethereum chains, there's probably 30,000 developers who are working on Ethereum-based solutions. So it's now part of that is because Ethereum's a more complex thing. It's a mini computer.
But there's a big difference between Bitcoin development and Ethereum.
But Dash you bring up is interesting for the reason that the team that manages Dash has actually set aside a certain amount of, I believe it's mining dollars that Dash collects. I'm not positive, but they take a certain percent. And Bitcoin doesn't do that. There is no Bitcoin, organization that takes a piece. I'd be happy if they did, if they built it out better. But the Dash people built up, call it market development funds. And then the stewards of Dash are then going around saying, oh, would you like to integrate Dash as a, as an e-commerce site? Would you, as a group of developers, like to build a cool Dash application? And they're handing that out, which is the way companies do it.
It's a good way of doing it.
And therefore, they're building an ecosystem. By the way, Wax is going to be doing the same thing.
Which, again, is your token. If
Yeah.
you want to find out more, it's waxtoken.com. That's
Yes.
where they can go. That's William Quigley, Ken Rutkowski, this Coin DMZ. A couple more things. Let's talk about this. This is an article, or actually headlines all over the place lately. People were getting all excited that the future markets are going to start going after crypto, and they're going, all right, that's great. It's actually not a good thing, is it?
Can you explain what a futures is? A futures contract?
Explain it to me.
Okay. So I just asked because this is a big deal, guys, and I see what I think is incorrect thinking going on. And only caveat is often what I think doesn't make sense doesn't matter to the crypto people, but whatever. But a futures contract is it's like an option. It's an option for you to sell your security at a set price in the future. You think, for instance, that your business is going to be going down. You think that the price of something is going to go down. You might want to buy a contract called a future that allows you to sell that item, let's say it's Bitcoin, for $10,000 anytime over the next year. Well, what if the price drops to $5,000? You're in luck because you can go and get $10,000 for that. You had to pay for that, right? But you get my point. So futures contracts allow you to lock in your gains in the future. You can set a price and you can say, this is what I want to sell this for. And even if it drops in price, that's what I want to sell it for. A lot of people are getting excited because futures contracts tend to imply sophistication. So the big Chicago Mercantile Exchange, Chicago, where you're from, NASDAQ, the big stock exchange, these groups are saying they're going to offer crypto, Bitcoin probably and Ethereum first, futures contracts. While that may sound exciting, and I've heard people say, wow, that's really great. You know why? Because that gives us legitimacy. I don't really think we need the legitimacy. What I think is the risk is you're going to have a lot of money coming in saying, I'm satisfied with this price or this price. And the effect is going to be that the futures contracts could make it much more difficult for cryptocurrencies to go up in value over time. That's the effect. And it is the effect you see in traditional markets, traditional stock markets. Futures contracts, or we call short selling, tends to put pressure on the prices. It kind of forces them down. You have buyers wanting to buy it. You have futures contract sellers. So I don't know if the crypto world has not abided by a lot of traditional financial rules.
But it doesn't sound like you're all excited about this.
But I see futures contracts. You know what I say, guys? This is going to slow the appreciation of our currencies.
Okay, we got 2 minutes left. You got all excited when you saw this on the trending side over at the App Store.
What is that?
Well, it's Coinbase. Coinbase, of course.
But I mean, what is that screen?
That right there is the top trending apps that are being downloaded at the App Store.
Right now.
Right
on
now.
the Apple App Store.
Number 1 is Coinbase.
Which is crazy.
Why?
Right. Well, it's word of mouth.
Well, that's crazy because what did Apple think about anything that was crypto?
Oh, yeah. 4 years ago, guys, frickin' Apple, they banned Bitcoin apps. They're like, those are awful. Those are evil. Losers. Apple was banning apps, and you couldn't do anything, and sucked because you could. How did you get it, right? Well, there were ways to get your app, but you couldn't do it on Apple. They reversed that eventually, but now 4 years later, we have Coinbase, the #1 app for buying and selling and holding your cryptocurrencies on Apple. Crazy.
You happy?
Well, I think
you were happy. You actually sent me a screenshot
I'm
of
happy
your iPhone
about
going,
it because I'm happy about it because it implies that consumers, everybody out there in the world is beginning to see that cryptocurrencies are something that maybe they don't put a ton of money in, but they put a little.
Your grandmother's doing it. My grandmother's doing it. They're doing it. All right, William, people want to hunt you down. Where do they go?
Well, they go to
waxtoken.com. That's where they go.
Check us out at opskins.com.
All right. Of course, this is Coin DMZ. We're here every week giving you the updates and the know-how of what's going on in the crypto space. Big Billy, Mr. William Quigley, Ken Rutkowski, thanks a lot for hanging out with us. We'll see you next week. Thanks a lot.